One of these days.
Uh-oh, you're going to hit me with some music,
How about you?
some sing song. All right, we're going live here for everybody who wants to hear about how it's going with our passive income. We share this every single month with you so you can see what's working, what's not working. And a lot of times it's a chance for us to better understand our own numbers. It's, once a month at a minimum. But I don't think that's that bad, Joey, that we check it once a month. How often do most people check their financial stuff?
Well, man, some people they rather check on their vacation plans more often, and it's just because I think if you're we're not even starting the podcast yet, but I think it has to do with the fact that they can't really because of where their money is, they can't really do anything to influence the outcome, and it makes them shut that part of their brain off. What do you think?
Yeah, I do think that finance is one of those areas that we all are interested in, but we all are a little bit um, concerned about our lack of understanding of it, so we don't do that much with it, right? For those of who this is not their day job, if a professional or physician, or you're just working at a company, just doing your thing, the concept of money, other than how much you're going to make this year, hopefully how much you're going to spend this year, it's usually about the depth of it. So we created this podcast to expose a lot of different areas, to say if the two knuckleheads from Alabama like us can figure this out, and I mean by figure it out, mean learning, right? If we just keep learning, we're just a couple of beggars showing the other beggars where the bread is, and there's still so much to learn. But yeah, this passive income report is designed specifically to help us track, are we getting closer to our objective of becoming financially free? And if you're listening to us for the first time, financial freedom is not when you have 7 or 8 figures in a 401k account. It's not even when you have all your debts paid off. It's when your passive income exceeds your monthly expenses. And if you will actually start tracking those two things, tracking your passive income, tracking your monthly expenses, it'll help you understand as a percentage how close you are. So we're going to go live now for the podcast. You getting kind of the behind the scenes. If you watch this on YouTube, or you're watching it live, or wherever you're at, thank you for doing it. And let's take this thing on the road, as they say, Joey.
It sounds good.
All right, Stallion, we got to break down what happened in October of 2024 as it relates to our personal passive income. I want us to highlight, be fully transparent, as many of the actionable insights that we can give someone, that they can see what was working last month, what wasn't working, and maybe what are we going to do coming forward. What else would you add to that?
Well, I'm just thinking, if you're trying to break free of that 9 to 5 and create passive income and spend more time with your family, then this episode is for you. And at the end of the day, if we can be transparent with you, then you can hear that this is not a bunch of fluff. It's not like we are selling any of these things. We're just being consumers and partakers of them so that we can share our experience, and you can kind of cut through some of the noise, if you will. That's our job, is to guide you. You're the hero, and we want to guide you on your own path to financial freedom. So I don't say we take any more time, Russ. Let's dive in to this October 2024 report right
All right, let's do this thing. All right, coming out of the break. Okay, Stallion, let's break this down into 3 components. First, let's talk about the wins and the current strategies that were working well for us. And there's a few of those I think we need to keep highlighting. A lot of very familiar favorites in there. Also, we had some challenges, or some maybe even learning moments. I want to make sure we break down those so that others don't have to go through those. And then maybe last time, let's kind of look ahead and see what's on the horizon. What are some of the opportunities that you're excited about, things that maybe you're looking to consider? So talk about point number 1. Maybe you want to share the report. So if you're not on YouTube, you might want to flip over there if you want to see us as we go through this. breaking down our actual numbers, both the income, the expenses, and what the net profit is, what is one of the items for last month that you would point to of a win or something that was working well?
Well, first of all, if you're not looking at the report, I'll just give you the quick and dirty of it. Income was 66,451, expenses 17,682, and bottom line was 48,768, which that was a little bit off of the month before, about 8% less, but we're hovering right in that $50,000 a month range. And for us, that's a great place to be because there's a lot of different moving parts on this report, as you'll see. The ones that stick out to me, if we're talking about wins right now, Russ, I can't I can't ever stop talking about the landgeek.com, right?
Hmm.
Our land business, which again, if you've never heard us talk about this, I'll break it down. We're buying and selling raw land at a discount. We're buying it at a 25 to 30% on the dollar retail price, turning around and sell, excuse me, buying it wholesale, selling it retail. A lot of times to people who would normally not be your traditional land buyer. And let me explain what I mean by that. These transactions a lot of times are $10,000, $15,000, $25,000 tracts of land. And if you try to go get a traditional loan at a bank to purchase a piece of property like that, it really doesn't exist. There's not a lot of appetite for it. So when we can owner finance that property at 15,000 or 25,000 for $300 a month for 60 months or whatever the case is, whatever the terms might be, we're actually making a transaction happen that wouldn't otherwise happen. And so it's a really opportune place to be able to buy at a discount and turn around and make the highest leveraged increase on that price by offering that owner financing component. And this month alone, we were up over 33,000 in terms of the income there, or excuse me, I'm sorry, 31,439. And so our net on that was just over 22,000. What would you add to that, Russ?
I'd love it to be 5 times that much. I don't know about you. Like,
Let's keep going.
people ask
Absolutely.
me all the time, like, how does that work? Like, it is that, when does this not work? I haven't seen a time where it doesn't work, right? Like, I've asked about, seasons that have created where there's been a downturn in the cash flow. And that was really like in the 2012, 13 range is where a lot of defaults happen in this world. And it wasn't that money was lost. It was just the cash flow stopped and they had to go back and start selling those, plots of land back out and getting those notes going. It took a little bit. So like for me, I think this is an easy area for us to focus on. A second win area, and I just noticed, Joey, you're missing a line item. I've looked at this, so I can't blame you completely, but we're missing. We have multiple private loans out there, and you only have 2 of the 3 listed on here.
Hmm.
So technically, the other one was for a little over $1,900 a month. So we are over 50,000 for the month. I'll let you
Man,
go and
thank
fix
you.
that at some point, maybe as I talk, because I can fill up the air if you need me to. But that's one of those things that I would say definitely a positive for us. Like we're we're always following the concept of becoming your own banker, and the easiest one is to do a private loan and to back it up with some sort of collateral. We've done that with businesses. We've done that in the space of real estate. We've done that in actually a business that we're that's operating and one that we've sold. So lots of different loans that we've been using this private lending on. I'd say that that's a winning strategy. It's a very passive strategy, but it's also you get to control and own the asset without owning the asset. What do I mean by that? Well, if the person defaults, whatever the collateral is backing it up, you can take over. So you have the equity, you just don't have ownership. You don't have day-to-day control, but you don't have day-to-day headaches, and you just get paid. And if for any reason you don't get paid, then you can take over ownership of that. So I'd say that's one of those winning strategies for us today.
Well, and let me add to that for a second. The fact when we had our short-term rental business, and it was one of those things where we started to see man, maybe this isn't a place where we really want to be long term. And we said, well, let's put it on the market. Let's put it out there. And the best scenario was for our operator to buy it from us. When we owner finance, that is no different than the way that we buy land and then owner finance it, right? Well, I wanted to challenge you as you're listening to our podcast. A really practical thing here is think about the assets that you already have as potential ways to own or finance them to somebody else. Now, I'm not giving you advice. I'm not telling you you should do this with everything, but consider it before you just do a retail sale where you immediately sell it for the highest that you can on the retail market. What if I were to consider financing it to somebody? Could I potentially get a higher price? And the answer is yes, because you're extending typically the time frame in which you're going to receive the money. And in some cases, you're actually maximizing your tax efficiency because you're not having to take the biggest hit all in 1 month or a 1 year rather. So just as a takeaway from this, not just telling you what we've done, but how can you maybe implement that and think about that differently? The last thing I'll mention, as far as like a big win for the month, is if you scroll all the way down here, let me bring this back up. We had a distribution from our oil and gas fund. It's $3,759. That's a really great return that we've had on that just this first year in this fund. And the reason I bring it up right now is one, it's been a great, uh, it's performance for us. But I think I'm really bullish about this, Russ, because of the recent presidential election. You've got somebody in office who's very pro oil and gas, as opposed to there was some question, in the last, presidency that maybe there were some things going away from that. And there's so much demand if you look at it, there's so much demand for this. It only makes sense that we would have more and more investment in this space. So I look at this as this is a win today, but it's actually something that I think will take on some legs here in the very near future. You're muted.
Man, that was the best thing I've ever said on our show. This is an easy economics equation is when demand is strong, right? And supply goes up, what happens to price?
Got to go up.
No, when supply goes up, if
Oh, I'm
demand
sorry.
if demand is the same and
Gotta go down.
supply goes up, price goes down,
That's right.
right? And so what we're going to see is that we have a presidency that Trump is saying we're going to drill, baby, drill. Right? He's saying that he's going to allow RFK Jr. to take care of all the stuff he wants to do on the health stuff, but he's not going to let him touch the oil, the liquid gold, as he says. Well, what does that mean for us? Well, as consumers, it means we're going to have lower prices at the pump if we can increase supply, right?
That's right.
Now, if we're owning oil rigs out there, we're owning in the oil and gas space, and we're being told, hey, we're going to have an opportunity for them to keep drilling, then that means now they're going to create an opportunity for demand to go up, right? Meaning that there was manufacturers out there that were stopping, right, or trying to turn from oil and gasoline producing engines to try to go more EV. Right. So we were going to have a reduction in the demand. Well, I think now we're going to see like, hey, as we can produce more oil, supply will go up. There'll be more opportunity for it to go down at the pump. But I think it also will drive demand for us, and we'll continue to see the need for these, oil producing rigs that we're invested in right now. I think we've already seen there's a huge gap between what the true supply is and what the demand is. There's going to be a continuous increase in price overall. Hopefully, though, for us at the pump, it'll be less. I think that's a great idea that you pointed that out. Let's move to challenges and some learning moments here. Things that maybe we need to like point to and say, I wish I wouldn't have done that. Or if I known what I know now, maybe I would tweak it. And for me, looking at this list, I would just go back to when we invested $175,000 into this Bitcoin mining fund. We got in there with like 10 other people, right? It was a closed loop operation where we had an experienced operator that was going to get all of the computers at a discount. They were going to run the whole system. We were going to, in essence, basically be buying Bitcoin through the mining operation. And when we did this transaction, Bitcoin was trading at like $28,000 to $30,000 to USD per coin. Now, Joey, what is its current price?
I haven't looked at it today, but it was up over 81,000 the most like a couple of days ago when I looked.
Yeah, I would say it was. I'm pulling it up as I speak because when I looked at it last time, it was at $86 or $86,000. It's 87,929.
Unbelievable. So
So
almost triple.
yeah, we've seen it almost triple. So had we taken $175,000 over 2 years ago and just bought Bitcoin, we would have over $550,000 in our account. Now, Joey, just you look at this account. I can't even log into it because it's one of those wallet systems that I can't even remember the code. For better or for worse, how much money is in that account today?
It's not much, Russ. I mean, I'm embarrassed. It's somewhere around 17,000.
Guys,
Can we be more honest? Can we be real here?
can you feel my pain on that?
Good night.
If we would have just bought Bitcoin, we would have $550,000 worth of Bitcoin. We bought into this mining fund. Oh man, we're gonna produce the coins. Like we're not gonna try to dig for the gold. We're gonna sell them the shovels kind of thing. And oh my goodness, like this is one of those moments where you look back and you say, well, that was a $500,000 mistake. And that's where we are. And you want to know why? So do I, right? Like I know some of the reasons why is that, the cost of electricity has, skyrocketed. And so the energy prices, to operate those machines are way higher than was initially, planned for. I think we've had some technology issues that have cost us more than we anticipated. I don't know if the halving was expected or not expected, but it happened. And the output has been less than what we anticipated. But I can't imagine the price is not what we expected. I think we all anticipated the price of Bitcoin to continue to rise. And I think we're all thrilled at the rate that it's risen. The difference is that whoever sold us those machines, I have watched NVIDIA stock price. I guess I can tell who's making out like a bandit on this thing.
Yeah. So needless to say, that has not been a winner for us. It's been a major loser. In the same vein, well, I can't say it's on the same vein. It's not nearly the same impact, but buying into a ice machine. Maybe it's the fact that we bought into and didn't have a great location, but we're on the side of a major highway in Alabama. It's on the way to a lake. I mean, it's a pretty good location from what I could tell. My guess is that the projections that people are putting on these things are not realistic. They're just not. And for us to consistently month after month be losing, I'm going to tie this back to the first point that we made about what's going well. We're in a position now where we're thinking we need to go ahead and just sell this thing, cut our losses, right? Well, in a sense where you need to sell an asset, i.e. an ice machine, you can do it one of two ways. You can go to the retail market. Now you've got a used machine and you just need to cut your losses. You're willing to kind of cut some deals, right? You might be at 75% of what it actually would cost retail, even though it's only 6 months old or whatever. And that's where people get good deals, right? But if you want to make a potentially better return on this already losing situation, how could we potentially own or finance it to somebody? Now, just because of the convenience of that person not having to come up with all of the money, up front, we can require a higher price. And so we may be able to get a higher payout if we own or finance this to somebody going down the road. And anyway, I'm just bringing that up as a, hey, this is a real challenge. We're having to sell this thing because it's a loser, but maybe somebody else can use it and actually make it a winner. That's what my hope is.
Well,
But
so
how do
here's
we win in the process? That's what
some
I'm saying.
learning lessons out of this is don't buy new. Like we shouldn't have bought it new. We should have
Yeah.
went to the same website because when we're like, hey, we need to sell this thing, can you go figure out what the price of these are selling for? Did we find a whole laundry list of these that are selling used out there?
Yes.
And they were
Yes.
selling at like a 30 to 40% discount.
Yes. Yes.
So
We weren't
if
alone.
we would have been so optimistic that we would have made money, we could have bought it at 40% less. So first key is stop buying new. I should have learned that whenever I bought all of those new cars to try to put on Turo.
Yeah.
And the depreciation kills you, right? You take on all that depreciation at the very beginning. So that was a big mistake that I think if I could go back and go, man, we should have bought used. All right. One other learning lesson that happened is I got a chance to go and spend time with our family office, and we did a tax strategy intensive. And I realized, as people who've been borrowing against our cash value life insurance policies for now 15 years, you create this thing whenever you use it for business purposes or investment purposes. It shows up on your tax return if you tell your accountant as investment interest expense. And Joey, shame on me for not being better up to this point of really looking at my tax return outside of the 1040, right? Those first two pages, but never scanning down and looking through to look at carryovers. And so I'm going to encourage you right now, if you can pull up your tax return, especially if you itemize, and you can hit control F on your keyboard. Little box will kind of search box will pop up and type in the word carryover and look at those carryovers and see what shows up. For some of you, it may show up that you have this thing called investment interest expense. And when I did that, I found that I had over $130 something thousand of carryover of investment interest expense, Joey. That means that we've been borrowing money against life insurance policies for the purpose of investing into all these projects that you're seeing on our passive income report today. And because I didn't have investment interest income, because a lot of the things that we invest in don't create investment interest income, we get capital gains and other ways that they're being paid to us. I haven't been able to write off that expense. I didn't know that. I thought it was writing off. I thought it was reducing my tax burden.
Right. Same.
Nope. It was just going on there, and my accountant was putting it over there at the disallowed, because if you don't have interest income to offset it, it just goes as disallowed and gets put and continues to be added up each and every year. Well, so now I'm going to be looking for in 2025 more investments that will produce investment interest income so that I can offset that investment interest expense. So, Joey, if I can find investment interest income of $133,000 this coming year, I will receive that 100% tax-free.
That's efficient right there, Russ. That's efficient.
Tax-free.
I love that.
When we think about the way that we invest, we also have to match the taxes associated to it. And that was a huge lesson for me this past month as I went through that training. And I'm like, oh, man, I learned that lesson. That's why I want to share it here with you.
Well, and I'm just going to throw this in as a transition to the third point of the day is what's on the horizon? Like what's next for us as it relates to passive income? And because you just pointed this out, the investment interest income or expense, to find investment interest income, we got an opportunity, right? We've built a debt fund that people can invest in us. And what I mean by that is for years, you've said, hey, I want to invest with you guys. I love what you guys are doing. I'm excited about it. I want to do it. I just don't want to do all the work you guys have been doing. I just want to invest with you. And we don't have that opportunity because we didn't ever want to put your money at risk by investing in another operator. investing in another investment outside of something that we know and control. And for now, we've built a fund that you can invest in us. As our company, Strategic IBC, continues to grow, we're actually going to be obtaining other insurance companies, smaller IBC companies that are looking to be a part of something big. We're going to be acquiring those companies. And for that, we need capital. And we could easily go to a bank. We could easily say, hey, we need to borrow money to buy these practices that are very profitable and immediately pay the debt service, more than the debt service. But we want you to be a part of this, right? You already know, like, and trust us. You already believe in the mission that we have to help 1 million people create their own passive income operating systems and get to financial freedom. And now it's an opportunity to get paid to be a part of that. So I don't know if you want to share a little bit more details about that, Russ, but if you're interested and want more information, go to info@wealthwithoutwallstreet.com and put the term accredited in the subject line, because this is for accredited investors only. And so just want to make you aware of that.
Yeah, no. So basically, what Joey said is that if you're like me and you have a bunch of investment interest expense and you got that carryover, our debt fund, as our accountants and attorneys tell us, if you're an accredited investor, and you need to go research exactly what that is, if you're an accredited investor, that you can now receive investment interest income as we pay it out from this debt fund, and that could be used to offset and wipe all this carryover that you have. So I will definitely be an investor in this fund, and that will be a piece of that $133,000 of investment interest expense that I'm going to be getting rid of. And I do think that there's a lot of opportunity. People love buying businesses. One of our friends, Jonathan Bates, loves to talk about the 5 levels of crazy. And the 5th level of crazy is when somebody gets out of the military and they go buy an already profitable business. And he's doing it tongue in cheek, right? Because really one of the most successful things you can do is buy a profitable business that's already been out there for 2 or 3 years, because it's now gotten through the hump that so many don't make, right? And if you're buying a profitable business, then you're now able to take that business, use your own skill set, maybe use some economies of scale if you already own something very similar, and make it that much better. Well, that's what we're going to be doing. We're going to be buying small insurance agencies who focus on the concept of infinite banking. And we're going to be bringing them into our network, because we've built a team of people all over the country that's helping you and others do this. So if you know someone who is out there, who's great at infinite banking, who's working on their own in a small team, maybe you ought to say, hey, did you know that What's What Wall Street are looking to buy some other practices like yours, and help you grow with the team and help you be able to do some bigger things in your life? Send them our way. We would love to talk to them. Again, you can go to info@wealthwithoutwallstreet.com if you want to send them our way. If you're interested in what it would look like to be an investor in us, as Joey said, send us an email at investor that says accredited with info@wealthwithoutwallstreet.com, and we'll have our team respond with all the appropriate details.
All right. So last thing that's on the horizon, and Russ, I got to tell you, you've taken the most lead on this, but I'm not far behind you. Okay. I know you say I'm slow. I know you say, hey, he's never going to catch up. Just watch me in the rear view mirror. Okay. Just keep looking. The vending machines. We're going to build a route here in Birmingham. Our daughters are getting involved and helping us with this, but you've already purchased the first machine, and which, by the way, we just mentioned. Why did we buy that thing brand new? What do you think about that? Should we have not looked to see if we could have found that thing on Craigslist or eBay or something else like that?
Hey, this is you have to wait 9 months for me to say, why didn't we buy this thing used? No, I don't know. I'm crossing fingers and toes right now to say, oh, well, because the AI technology has improved so much, we don't want one of the old, outdated models. We're actually going to be more efficient and more effective with the newer models. But that could be a complete fabrication. I don't know. That's what I'm going with. It's already purchased. So,
well, it just might be something we should learn from, right? Like maybe we can find one that's only a year or two old, right? That has that new
6 months
technology.
old. Let's find somebody that's you know what, it ordered it. It took so long for it to get there that the people that they were agreeing to put it in their apartment complex or their commercial building decided, you know what, I'm going to just not do it anymore. And they're like, well, what am I
Mm,
going to do with it? And they got so frustrated they did nothing with it. It's just sitting inside their garage, and they're looking to get rid of it to get some of their cash back.
that's right. Let's figure that one out for
All right.
sure.
Well, hopefully you found value in today's episode. If you need to take action, if you need to find out how to turn passive income on for yourself, take that active income you've been making. We've built an ebook for you. You can go to wealthwithoutwallstreet.com/PIOS. That stands for Passive Income Operating System. And inside of that, it's going to give you the steps to turning active income into passive income while you sleep. And if you've been one of those that have already gone through that ebook and you've just been procrastinating, right? You planted the seed, but you never put water on it. Here's your chance. Go to wealthwithoutwallstreet.com/free call. And one of our coaches can actually help activate this plan for you and help unlock the steps so that you can actually get to financial freedom faster. Thank you so much for either listening, watching, whatever you're doing. We always appreciate you. Have an amazing day.